depreciation on your car is if you bought it for $20,000, the IRS is saying that this has a general life, the car has a 5 years, so that you can depreciate the value of that car over. So every year you would get was that $4,000 deduction. However, since this is only 40% used for business, you would get 40% of that 4,000. In addition to that, you can get the car insurance, the gas, the parking. If you can get that too. But if obviously parking, you can tie directly to expenses, so you can get 100% of those. But that is the actual rate method versus the standard rate method. And again, use the rep deduction always. Okay, as long as you can support it. So those two, just wanted to get a little bit more into that. I also know that there are a lot of other, types of deductions that you can do specifically with assets and cars, bonus depreciation, things like that. That's Section 179. We're not going to go into those, so sorry, but those are other things that you can do when you have that car. But we wanted to scratch the surface of these types of deductions. Okay, so let's look at a scenario. In this case, if you have $120,000 of business of income, that $120,000 with no deductions taken off, that means that you are subject. Your full $120,000 is subject to self-employment taxes. So if we did that 120,000 times 15.3%. That 15.3%, that's essentially what that self-employment tax is. And the reason why it's charged is because as a self-employed person on LLC, you don't pay payroll. You literally just all the money that you make in your business just goes to your pocket. So this is the government's way of saying, hey, you skipped out on payroll taxes, so we're just going to name it self-employment taxes and hit you with it. And so that's what that self-employment tax essentially is. When you have a S corp, which is the main reason why people get S corps, is because you don't get subject to self-employment taxes. You do have to put yourself on payroll and pay payroll taxes, but your full income at the end of the year after payroll and after business expenses won't be subject to this 15.3%. So you can just see how powerful that S corp election is, but even more simpler, let's just see how powerful it is just to make sure that you have all the deductions you should have. So when you do 120,000 times the 15.3, you get $18,360 of self-employment tax. So like alone, not even thinking about income taxes, right? But if you took $35,000 of expenses you've already spent money on, things that you've already, the expense you've already incurred, you can take that 85,000, multiply that by 1.53. That equals about $13,000, right? So just in that 18,360 minus the 1305, that's about $5,000 in savings right there that you can see. And obviously, if you have more expenses there, you can gradually go up and up and up. And in different scenarios, you can see how impactful it is just to take credit of the expenses you already have spent money on. And Lily helps you with that by automatically categorizing your transactions. All you have to do is swipe it left or right. They'll make sure that it is in the right place if it's a personal versus a business expense. Ideally, you're not mixing those two. But the categorization as well is as easy as, swiping it. Yes, this was, dues and subscriptions, or yes, this was paying business insurance. And it helps you categorize that stuff within your actual bank account. You don't have to go into and have a separate, company like QuickBooks or like that to do it. It does it for you, which is great. You can also sync your external business credit cards to maximize your deductions as well, to make sure you have a one-stop shop to, have where you have everything listed. So those are really, really great when you are looking to, be in order by tax time. All right. So in addition to your actual business expenses, you get other expenses and deductions throughout the year that the IRS allows you to get, depending on what you are spending your money on. And they do it to incentivize certain things. Okay. into retirement. So they're going to give you a deduction, for that. So that's retirement account contributions are something that you can, defer your income from. Student loan interest, they want to incentivize people to be educated, so to take loans. So that interest that you pay on your loans, you can use as a deduction against your income. Health insurance premiums, and 50% of the self-employment tax is also deductible, because they are like, hey, we don't want to hit you, with that entirely. We'll give you some relief on, on the personal income tax side, so that we're not double dipping too hard. And so that's what are some of the major above the line deductions, and we'll see how that plays in, because when you have your gross profit, again, your income minus your business expenses, that gets you your net earnings, and then you then subtract the above the line deductions that we just talked about to get what's called the adjusted gross income. This adjusted gross income number is a really important number, because that dictates some of the other types of credits or deductions that you can actually take after you get past this this particular number. So it's really important, as far as tax wise is concerned, to get this AGI as low as possible, so that you can make sure that you can still be within thresholds or still take advantage of certain things going forward. Okay, so the below the line deductions. So we had above the line deductions, we got below the line deductions. Not too different from the home office deduction, not too different from the car mileage. They give you two options. You can do a standard deduction, which they just give you, this is the rate, this is what you can take based on what you're filing, or you can itemize deductions. So we'll go into what those itemized deductions usually are in this next one. So we donate to charity. The state and local also offset to charity. The state and local also offset. There's a whole bunch of other ones, but these are usually the ones that really move the needle. And up until recently, I would always tell people, like, if you don't own a home, itemizing your deductions, really isn't, or paying a significant amount in charity, then you never really get enough itemized expenses to get over the standard deduction. So it's almost like, hey, do you want to spend $16,000 of something just to be able to get over the standard deduction? Outside of that, this year, through some tax law changes, you're actually able to get $40,000 from state and local taxes. In the past, it's only up to $10,000. So it was a really hard stop, because a lot of people still would be able to get over that hump. But now, if you're in a state that pays high taxes, like in California or New York, you have high state and local taxes. That now is a lot higher. So I would expect this year a lot more people would be itemizing their deductions, and you can see a lot more benefit from doing that now. So, but again, these are the major ones for sure when you are looking to decide, should you do a standard or itemized deduction. All right, so again, figured out what the AGI was. You subtract your below the line expenses, so either the standard or itemized deduction, then you get to your taxable income. That taxable income is then subject to certain other credits or certain other then you apply a tax rate. We're not going to get into credits in this particular scenario. But we're going to figure out how to calculate your actual tax once you have your taxable income. So again, the recap is, you get your gross profit, your income, you subtract your business expenses, you get your net earnings. Net earnings into, you subtract out your above the line deductions, get you your AGI, your adjusted gross income. You then subtract your below the line deductions, so either the standard or the itemized, to get your taxable income. Then you use this tax table. we are in a progressive tax system. I know I've heard a lot of misconceptions of that. Once you're in a new tax bracket, all your income gets taxed at that new rate. That is not the case. What happens is, when it means by progressive, is up until a certain number is taxed at a certain percentage, and then any dollar above that number is taxed at the next rate percentage. So if we're doing single, if you're in the single tax bracket and you're at 10%, if you're at you make $11,925. All of that money up until $11,925 will be taxed at 10%. Then the very next dollar over that and everything above it up until 48 will be taxed at 12%. So, illustrative purposes, if you have $20,000 of taxable income, remember we just did all that stuff, and at that final number you did after all your deductions leads up to 20,000. That 20,000 is broken up. So the first 11,925 will be taxed at 10%, and then the remaining was that $9,075. $8,075. Yeah, $8,075. That would be taxed at the 12% tax bracket rate. Okay, so that's how it works. So just because you went to 20,000, the full 20 isn't then taxed at 12. It's broken up between 10 and 12, depending on where you file, where you land at within these brackets. Okay, and so that's how you can easily determine your taxable rate, your taxable income, and your tax liability at the end of the year. This again is my favorite thing that Lilly does, is that they allow you to automatically save for your taxes throughout the year. As a business owner, it is really hard to put aside money sometimes when you're making ends meet, you're trying to make things work, you're trying to push. I can use this money for my business to push things along versus, put into savings or giving it to somebody else. So what Lilly does is you can automatically set a percentage, and that amount of money can be put aside into this tax bucket that you can then use to pay your taxes. A good out of sight, out of mind thing that automatically happens. You do still have to actually make the payment. So it moves it into a separate bucket within your account, separate account, and then you could then use that money to go to the IRS or go to your state's website and send in that estimated tax payment that's already saved up. So that's going to be really, really huge for people who need things out of sight and out of mind, to make sure that they're staying on track. And you can set whatever percentage you deem is necessary. So we already talked about the federal income tax, we talked about self-employment tax, talked about payroll tax, state income taxes. It depends on your particular state. So in California, I believe they get up to about 10%. Depending on your progressive bracket. In Florida, there is no state tax, right? Or in Texas, there is no state tax. Now they got some higher sales tax and stuff like that, but there is no state income tax. So the thing that you can do is look up your specific state to understand how your state works. Some do a flat tax rate, so it's just 5% across your particular state. But just know that that's also another potential tax that you have to look out for. Franchise taxes, that is the tax that the state charges you just to be in operation, just to be having the privilege to operate within their state. For example, in California, they charge $800 as a flat fee. Depending on how much revenue you have, that scales up. And in other places that might be, zero, that might be 200, it might be, it can just vary. So you have to see, specifically what that is for your state. And this is a big thing that a lot of people miss because they prepare their CPA for their tax, for their tax filing. This is a completely separate thing than income tax. And more times than not, people don't make sure that this gets done as well because they think that it's just taxes all being done at the same time, and it's not the case. So you need to be very clear on if your franchise tax has been, paid, because it is something totally separate than income tax. And then sales tax, totally separate than all the other taxes that we talked about. And this is something that you have to pay throughout the year and be compliant throughout the year for. So first, literally mostly all products and certain services are subject to a sales tax. So again, having the ability to sell something in a particular state, the states charge a sales tax with it. You have to set up a specific sales tax account with the state and make sure that you are compliant throughout. And so this is a really big one, especially for like digital commerce, retail businesses. All right, so it is, again, like I mentioned, the tax season, it hasn't started yet. It starts on the 26th. But even if you feel like, I don't have enough time to really get everything in or get everything done, just know that you can actually file for an extension. Your extension deadlines for businesses, for sole proprietors, or C corps, that's the April 15th. That's aligned with the personal tax return. But then S corps and partnerships, that one is the March 15th. So what you can do is you can send in a form that gives you 6 months. It gives you 6 months to file. However, if you owe anything, that does not give you additional time to pay. It just gives you additional time to actually file it. So when you do the filing, they do actually ask you, do you have an estimate or understand how much money you will owe by this time, so that you can then, submit that payment, because that is still due at the April 15th, date, or the March 16th date, depending on the type of structure you have. Okay. For LLCs, again, it varies depending on if elected as an S corp, elected C corp, and so you can see the different amounts here. No, sorry, the deadlines. Amounts, I said amounts. Accounts of brand. Forms and business entities. So we're going to go into each of the specific entities and talk about the forms, the tax forms that you would be looking to see as a result of that. So when you have an LLC, so an LLC, the only thing that LLC really does, and this is another misconception across, small business owners and even a lot of stuff that's on social media, is that the only thing that an LLC does for you is just gives you risk protection. Filing an LLC doesn't do anything differently from you for a tax perspective. LLC and sole proprietorship, it's literally almost the same thing, other than the fact that you're able to separate the liability from your personal, personal income, personal assets, and everything. And so, with that being said, LLC, you still have to file on your 1040 Schedule C. You will have to pay your estimated tax throughout the year, and you will be subject to a self-employment tax. And so, these are the forms that are, aligned with an LLC business owner. The next one is the S corp. So this actually is something that's going to affect, your taxes, and this is an actual tax election, actual tax decision. So what this does is it still passes on that income to you on a personal level. So it's called like a pass-through, same way that LLC does, same way as sole proprietorship does. However, a separate tax form is needed for your S corp, as a separate entity tax form. That's called the 1120-S. That income is going to be flowed down to you via a Schedule K1. So you'll get your profit or loss for your S corp on a K1, and then because you have to have a reasonable salary as an S corp owner, you will also get a W-2, and you will file that regularly, like you'll file any other W-2, and it'll all go on your 1040. But just notice that here you're not filing a Schedule C, you're just filing that K1 that you received, and that's going to be what helps you get the forms done. For a partnership, for example, a partnership, same way in the sense the S corp, you have a separate tax form, so it's the 1065 versus the 1120-S. You'll get a K1 as well for your share of the partnership that gets flowed down to you, and then you have your 1040. Your 1040, again, you got to pay your estimated tax throughout the year. Same with all these businesses, but you will be subject to self-employment tax as a partnership. As an S corp, you're not subject to self-employment taxes, but as a partnership, you still will be. Okay. And then you have a C corp. A C corp, totally separate, totally different. You have your tax form, your 1120, not to be confused with 1120-S. You have your 1120 for your actual business C corp. That income is taxed at the 1120. So whatever profit or loss you have for your business, that gets taxed at the flat rate of 21% there. If you have a W-2 from that business, you would get proprietorship looks exactly the same as an LLC because it operates the exact same on, when you're looking at the tax situation. The great thing with Lily is the fact that you can do have all your information pre-filed within the system. So if you have all your information, you do all your tracking, all of your accounting, your banking within Lily, they'll print out and pre-fill these tax forms for you based on your business entity. It doesn't file it for you, but it gives you a great head start when you go into your, whatever, if you're filing on your own or if you are handing it over to a CPA. Again, if I was, if you gave me a already done Schedule C or already readily available 1065 or something like that, I'd love that because it's all there. We ain't got to run around. We got to, chase anything. That's really, really helpful. It automatically pre-fills it, so it just makes the process a lot simpler and a lot smoother. Okay. And so speaking of working with a CPA, I know a lot of times people ask, how do you know who to work with, how to work with? And here is what I recommend. I recommend that, whenever you're finding a CPA, feel free to seek referrals, use online resources, do your research, consider their expertise and credentials. Not everybody is a CPA that does taxes. Anybody can technically do taxes, which is honestly something we need to talk to the IRS about. But anybody can prepare somebody else's taxes. But if you have a CPA or an EA, then that means that you actually went through a rigorous course to in training, and you have ethics requirements and everything to uphold. And so feel free to look that stuff up, ask them questions when you're CPA, review testimonies, truly understand the fees associated with it. I would say again that it's not necessarily just trying to find the best price. You want to find out who's going to help you achieve, your goal, right? If you're just getting things prepared, then that's one thing. But I know a lot of other CPAs, especially for people who work with me, I do more than just actually prepare the tax return. I also actively all right, here's where it's at. Here's what we can do. Here's some things you missed. Did you think about this? Did you think about that? A lot of the times when you go to an H&R Block or, your tax down street, whatever it is, they're just going to, you got all the files, here you go. All right, I'm going to file it. Have a great day. But when you work with a qualified professional, they can also help you on the spot. And then you might be able to find your person that you're working with throughout the year so they can help you tax plan and not just waiting till tax time to understand. And then within Lily Smart, you can actually allow your accountant to come into your account and see what's going on and make it easy for them to, get that information for you and from you. Okay. All right. So Lily Smart, a lot of the features that we talked about were in the Lily Smart, access. And so because you're here on this webinar, you're able to get 30-day free trial if you already don't, have a Lily Smart account. And so we're going to go into some of the things that Lily Smart can do. So the core product is business banking, and you'll enjoy all the same things that you would get in the regular, the standard subscription. The things that I always like to point out is the fact that you can get points, cash back on your card, your savings, FDIC insurance up to $3 million. Those are huge things. And so you definitely want to make sure that you are taking advantage of all of the different things that the Lily Smart subscription can do. In addition to that, you'll get the access to these accounting software. So smart bookkeeping powered by Lily AI. You can, again, sync the external business cards to maximize your deductions, make sure you're not missing anything. You can attach receipts. You can send out invoices and receive payments. Enhanced bill management. It's like you have a whole accounting system within your bank, which is great because you don't have to move from system to system to do it. And then for the tax prep, helping you get ready for tax season, tax prep, again, the automatic tax saving, the tax saving bucket, the pre-filled forms, sorting the transactions into the right things is huge to get you ahead of the game for tax season. And then this is something new, the business build program. So when you get a secure credit card through Lily, you'll be entered into the business build program, and it helps you build your business credit profile. And you can start tracking your progress. You can understand how to go through and build that up. You can get credit training tips and resources, and exclusive mini series to help you really grow. Business Build is a huge program for a lot of small businesses who need access to capital, and who are probably frustrated because it's like, I need credit to get credit, to get a loan, but in order to get a loan, I need good business credit. But in order to have good business credit, I need to build it up. And so this is one of those places where it's a good entry for you to start building those things up, and it's really, really, really powerful. Okay, and so we talked about how to access and how to think about different CPAs, how to work with them. Has a partnership with 1-800-Accountant that allows you to work with them. They get you a free tax saving consultation, see if you can lower your bill before filing, and you can access complimentary tax savings analyses and everything like that. So you can work with them on that. So I'll give it a moment for anybody to take a picture. And I'm going to switch over to the next one. And this is how you can get started for free with Lily, utilizing the Lily Smart as well. So now I'm going to open up the chat and see what has been going on. All right. Just to be very clear again, is that there will be a playback available. All right, I'm just reading through franchise tax info for individual states. Go to your individual state's business, website. So for California, they have the franchise tax board. So you'll be able to look up your franchise tax on your specific website. It's usually wherever you also did to actually start your LLC. All right. Oh, we got a lot of AI otter plans that did this. Okay. To kind of use transfer funds and something different. Yes, recording is possible to be a one-stop shop for your tax. It's better. Okay. Yep. Make sure your tax preparer stand behind work. You get audited. That's very important. You're not just filing taxes, they're filing their business strategy. Blocks the words, blah, blah, blah. You have an account version like in QuickBooks or some other model bookkeeper here. Love to see some quality competition. I will say, and I'll leave that for Lily, but I don't think that Lily is intending to be a huge competitor to QBO. They're a business banking platform that allows you to really get a head start and get some things done. Okay, can I replace again? Depending on what you use QuickBooks for, you may or may not be able to replace QuickBooks with it. Can you go back to the tax form side? Yep, one moment. LLC, yep, here's the LLC tax form slides. All right, I am with Lily. Can I upload prior statements here for following multiple years? I don't think that would be best. I think you should, if you're trying to handle prior years and everything, I would honestly say probably get that done separately, because Lily is just helping you with your banking within the system from then when you start and from going forward. So I wouldn't recommend that. If I'm a sole proprietor, I don't have to do franchise tax right now, correct? Also, if I were, honestly, you have to check your state, because being a sole proprietor, you still are doing business in that state. And actually, there are some cities that require you to pay certain taxes to operate within their city. So you really need to do your due diligence in whatever city and state that you're in, or if you have a tax professional or a CPA, financial professional, to help you to look that out. Were you able to fund the Lily with funds from a personal bank account? Yes, you can fund with a bank account. Also, do I accept new clients? I do. I will send in I'll put a link in here to kind of show you so that if people are interested in anything when you're doing your search, if you want to work with me, I'll put my link in here so that you all can get access to it. I typically get 1099 miss from my clients for income received, but this year I started receiving credit card payments and have banking forms. Do you have more fun? So a 1099 miss versus a 1099K, it's just different thresholds from different people. At the end of the day, the 1099s that you're receiving, you shouldn't actually need it because you should be doing your accounting and know what your total income is at the end of the day. The 1099 honestly is just a way for the IRS to make other businesses kind of tell on you. It's like, hey, we paid them this money, y'all. So if they don't report it, you know that they hiding something. But essentially, you don't really need the 1099s because you should already have your accounting and everything in order to determine how much money you actually made. And your 1099 should technically just equal up to that, but you don't actually need your 1099s to file, if that makes sense. Okay, income I receive category of services, correct? Yes, if it's a service-based company and you're providing services, yes, that is income categorized as services. The link looks like it's for a new account. Yes, for a new account, for Lily Smart account, correct. So if I convert a walk-in game closet into an office, all renovation to that space would be 100% deductible. Yeah, it would be. If it's used for business, and if it's used for necessary for what you do, then yes, it would be. I'm a single member LLC. I haven't launched yet, but I made a one sale. How do I move forward? If you made money, then you should file it. If you actually created your LLC, even if you didn't make money, you should file it. I personally think that, because a lot of times people say that, I didn't make any money or I lost money. It's still important if you lost money, if you spent money on it, to actually do it, because you would get the deductions that you can carry forward into the next few years. So when you have a loss in your business, you either can offset that against your W-2 income, or you can offset that against further future business income. But if you don't actually file your taxes for that loss, you won't be able to move it forward. So that's why it's really important to make sure you do that. Okay, if you're a sole proprietor, LLC, do you have taxes or just at the end of the year? If you are a sole proprietor, all the business we talked about, you have quarterly tax requirements to consider. So for sure, you need to make sure to do that. And it's the same like tax that you're paying at the end of the year. You just pay it throughout the year versus waiting at the end of the year. What's the difference between an owner's draw and a non-business expense? Does it matter Schedule C wise? So an owner's draw means that you're drawing from the profit that's essentially going to be taxed on. So a business expense is you paying something. You're saying a non-business expense. So owner's draw and a non-business expense are technically could be used for the same thing, because the owner's draw is just saying that you as the owner are taking money out, and that expense, that transaction is not related to operation of the business. So an owner's draw and a non-business expense could technically be the same thing. So I see what you're saying. Yes, the easiest answer to say is that yes, it's technically the same thing. But there is a little bit of a nuance there. And does it matter Schedule C wise? And it does matter Schedule C wise, because that owner draw and the non-business expense or the personal expense is not used to deduct from your gross profit. Okay, so that is something you will not put on your Schedule C. That is something that is totally separate. How does the Big Beautiful Bill affect small businesses? So there's a lot of different things things that the Big Beautiful Bill has affected. One of those being the getting that 40,000 cap being risen. It was 10 last year, now it's 40. There's a lot of stuff to go into that I actually have something that I have written out for it, and I can direct you to that. Again, once I put the link in at the end, that you can kind of use to see, the types of things that it can do. So I'll put that in later, and I'll make sure. And there's a way that you can send in your email, so I can make sure to send it to you. Okay, if I have an S Corp or C Corp, can I receive dividends instead of a salary? What forms do I file for dividends? I wouldn't recommend. So with a S Corp, you don't get dividends. It's the dividends only exist within the C Corp concept. But these dividends, you're taxed you're still taxed on that. Like your tax is what's called double taxation. So your corporation is taxed on the actual profit, and then they're taxed on giving you that dividend. But as far as you're saying, instead of a salary, if you do actual work in your business, then yeah, you need to have an actual salary that represents the work that you do. So yeah, it just depends on how you. Because you can obviously pay yourself in options or stock or however you want to do it. But I think there is some type of salary component, especially for an S corp. Then where do I find the option to apply for business credit? You can ask that in the Lily chat to help you get your business credit. I can help answer this. All good. If I'm active military, own a small business, and so does my wife. How does that work when we go to? Do we both deduct that? Yeah, you just split it up. You can't get more than your 100% of mortgage interest, but you'll just split it up based on the proportions we talked about. And thought that because I was an S corp providing service, didn't have to file you correctly was the first step to retro pay. Retro paying is a process because you have to file it manually because a lot of payroll systems won't do the retro pay for you. Again, if it's something you want, again, if you have a CPA, you can talk to them. But again, if you want some help, I could throw in the link. Tax catching up, new business. Yeah, you got to start. You got to do all the bookkeeping, get everything together, file it. You can take advantage of abatements, first time abatement, waivers to get some of those penalties, together. I literally just helped a couple file their taxes from 2023 and 2024. And then we're not going to help in 2025, but we caught them up. We're going to file for abatements and everything like that as well. Thank you. There's a Lily question. I'm going to skip the Lily question, Lily software specific questions, okay, and try to just focus on the tax and accounting. Is owner's draw taxable in the tax bucket? Owner's draw is already taxed. So the owner's draw is just you taking money from your profit that you're taxed on. Okay, so by taking the draw, you're not taxed on the draw. You're just taxed on the fact that you had a profit to draw from. I don't know if that makes sense, but it makes sense in my head. Okay, if my state doesn't have state tax and county have local tax, can I pay through my income tax? No, paying through your income tax is different. Income tax, federal is different from income tax, state income, local tax, those are all different, so you have to separate those across the board and make sure you pay those individual folks. So if I made 500 and spent 200, if I made 500 and spent 2,000, I should still file. Yes, you absolutely should file. You should, because that $1,500 loss that you have, you will want to carry that forward into the future. So when you make $2,000 next year, instead of being taxed on 2,000, you'll be taxed on 500, the 1,500 to the next year. I just started my sole proprietorship business, and I have more expenses than my income, so I don't need to file. Like, the same thing. You want to file if you have expenses so that you can take advantage of moving that forward into the next year. How does this all affect a non-resident alien with the single member LLC? Again, if you're if you're operating here, you're a non-resident alien with a single member LLC, you still have to abide by the same taxes and same laws that exist, when you're operating your business. If they're a referral, I don't know. Yes, carrying losses forward is definitely nice. How many years can losses be carried forward? I believe you can do it about 20 years into the future. Before my business card was issued, I was using credit card. What do I need to do to properly calculate expenses? You just need to take your personal credit card, download those statements, and bring in the business expenses that relates to it from your personal credit cards. Is it better to do an owner's withdrawal or put yourself on payroll? Depends on your business, depends on how much money you're making, depends on your expenses. A lot that depends on that particular thing, but and if you even have money to withdraw from, a profit to withdraw from. But the overall answer is definitely better to not have to pay taxes on certain things. My mom, she said, I don't need to collect tax because I am a service, but I've seen on the floor basis our hardwoods should be getting taxed. Yeah, it is very possible. You need to do that research because some services are subject to sales tax. If my state doesn't have state tax and my county have local tax, can I pay it? No, I already answered that. Sorry. I was told in EA that you have to place the meter on your calendar before you can claim it as a deduction. So it says, I was told by EA that you have to place the meter on your calendar before you can claim it as a deduction. That is not true. It's just that it helps you with having the documentation and the backup to support the expense, but you don't need to actually put it on your calendar to get the deduction. It's just good to do it as backup. When you withdraw money from the cash at ATM, have you justify it with receipts? So if you took money out the ATM and you spent it on something, it's just better to have what you spent it on as a receipt. Keep that receipt and attach that to the actual withdrawal from your account. All right, so I know it's time, and I'd really love to do everybody. Oh, I'm almost done. Okay, hold on. I can keep going. Okay, so will there be a replay? Yes. The expense became a deduction once paid or when the invoice is issued. So there's a difference between the cash basis of accounting and accrual basis of accounting. Most times people are in the cash basis of accounting, and therefore they are going to do it once the actual thing is paid. But if you're in accrual basis of accounting, it happens when the actual work was done. So that's a whole different issue, a whole different thing. But both of those things could be true. For that question of like, when are things taxable? Yes, we're hosting it monthly. Please feel to join. Please send. Yep, we'll do roughly. And what threshold let's say? The LLC, the S corp transition, where you're saving the most. Usually when you make that, what's that threshold? It's usually around 50K. So once you have 50K in net income, so after your income minus your expenses, and you still got about 50K, that's when that usual threshold, now it makes sense to switch. Okay, when you're filing business taxes, should they be filed under your business? It should be filed under your business if you have the business set up. As well. So you filed whatever you were working on. How much extra do I need to pay for my LLC if I didn't file poorly? This is a minimal type of tax that you have to pay, but it's calculated on how much you would owe. If you actually if your total tax for the year is like less than $1,000, they actually won't charge you. But if anything more than that, it's like a percentage. My state doesn't have state tax. My country have local tax. Can I pay it through my income? No. What if I haven't paid myself? Will this affect my filing? No, because they assume that all of your profit is you paying yourself. Now, if you have an S corp and you haven't paid yourself, they could ding you on that if they ever audited you. So that's why you want to make sure to take care of that. You're open. Okay, that's a Lily question. Does someone have to usually participate in these webinars? I don't think so. But so and let's see. I will have to pay 10% whatever money is left in my bank. Not necessarily. What's left in your bank doesn't necessarily translate to what you actually. Oops. Let me stop sharing. So I know I was asked a lot of questions, but I think I got to the end. So your LLC, what you have in your LLC, or sorry, in your bank account, doesn't necessarily equate to what you actually owe. Those are two different calculations. So it's not a one for one. So I would just say that you really just need to actually do your accounting, do your income statement, and everything to determine what you would actually owe. I'm gonna drop in my link tree where you can access. I have the for people who wanted to do the question. You just do the questionnaire. That'll give me all your information. I can send stuff out to you. And yeah, and I'll grab the emails as well that I saw in here. It says, "What is the dollar threshold for starting quarterly taxes?" If you're going to expect to make income by the end of the year, you need to count that up and figure out what it is. All right, and we'll do a couple more questions if y'all have them. Again, for dropping this link. Yep, that's the link there. Oh, I did the hosting panelist. One moment. Yep, here's the link. All right, and do you know a general rule for a 7 month to hold aside if business earns less than 60K? A general rule, again, there's so many factors that could depend on that. If that 60K is your actual profit, a general, it's just too much. I would have to see your actual scenario, honestly. So yeah, feel free. Again, that's my link. I'll put it in one more time. That's the link. You can get that. You have access to hit me up. I'll answer the questions that you need, but we do have to end. But I really appreciate y'all and the questions. I love it. I always try to stay and answer every question. So yeah. I appreciate everybody's time and look forward to, again, we're doing this once a month, so we'll be doing this again next month up until the tax time. So yeah, if you want to get your question answered again, or if you wanted to get a concept that re-explained, you can again just come to the next webinar, or you can hit me up in the link.
Can you go and play this now? Recording.
Thank you guys for listening and joining me on this journey of learning all things business. So I hope that little snippet was enough to help you guys with the basics of business tax prep for this year to have a successful season. Thank y'all.